talking about making money in a way that maybe you never even thought about before, which is actually investing in notes. And with us today to have this conversation is Fred Moskowitz. Now, Fred is an educator and best-selling author who's trained countless investors from all walks of life on how to create passive income stream of their own. Now, as a fund manager, Fred manages a mortgage note investment fund and is considered an industry veteran within the note investing area and arena. Now, Fred teaches the concept that individual investors are able to step into shoes of the lender through note investing and effectively be the bank. Frank, thanks for joining us today.
Thank you. Thank you, Ty. It's great to be here.
Yeah, I'm excited you could be here because I don't think in all the time that we've done this show that we've ever talked about note investing. So let me start. Like, how did you figure this out?
Yeah, absolutely. It's interesting. I got involved in real estate investing about 20 years ago. And, I think it's a great vehicle for so many reasons, but it's a great vehicle for building wealth for anyone. And in my journey in real estate, I learned this, that, a lot of people out there, they invest in real estate, whether it's single family houses or commercial property or multifamily properties, apartments, right? But not too many people ever talk about investing in the paper, right? The notes and the mortgages that are associated with those properties. And it's a really interesting part of the real estate and business in general. And a lot of real estate investors, they don't pay any attention to this at all. And when they think of a note and a mortgage, they think about being the borrower and never as being the lender. But note investing, what it does is it allows you to step across the aisle and become the bank. And so you transition from being the one making the monthly payments to being the one that's receiving the monthly payments. And what I found is that it's just a great way to increase the predictability of your cash flow and a great way to put your money to work for you.
It sounds really good, Fred. And I think I'd like to start, if you don't mind, from the beginning, because a lot of people might not even know what we're referencing here. So what are we talking about when we talk about note investing?
So with note investing, we're talking about actually buying an existing note and mortgage. And this is something that happens every day. There's a secondary market that exists out there where notes and mortgages are bought and sold every single day. And so a lot of times these transactions are done by banks and large institutions and large hedge funds. But for individual investors, there's a place for you as well to step in and participate in this. And so you're outlaying your capital, right, in exchange for receiving you're receiving the monthly payment stream that's coming in. And so you'll get a rate of return based on the risk you're taking. And it's a great way to generate monthly cash flow. And one thing we can get more into as we go on the interview is you can invest using retirement account funds and put those to work so that you're building wealth, building cash flow and income. A lot of people invest with a focus on appreciation, right? You buy a stock, you hold it, you hope it goes up in value, that the company you invested in does well, right? And then you sell the stock and you realize whatever appreciation was there. But what happens is you don't ever get paid anything along the way while you wait. But with note investing and real estate investing as well, there's a cash flow aspect of it where the whole time you own that asset, you're getting paid a payment stream, usually every month. And that's really powerful. And it really helps to round out anyone's investment portfolio.
So are we typically talking about real estate notes, mortgages?
That's what I specialize in, but it doesn't have to be. There are notes on all kinds of tangible assets, whether it's single family residential homes, or it could be commercial notes on office buildings, hotels, commercial property. We can also get into areas like auto debt is another area where it's a secured loan. It's backed by an asset. There's collateral, even yachts and airplanes and all of these other large, high value assets. There are notes associated with them because they're usually bought and sold with financing, with terms. And that helps facilitate the sale, but money is being made by whoever is holding and owning that financing.
So why do you choose real estate? Of all the notes you can invest in, from airplanes to automobiles to real estate, why have you found that real estate investing is probably one of the more lucrative?
Well, first of all, it's the most common, right? If you think about it, there are so many residential homes all across the country. So, and there's just more out there. Some of these other types of notes that I mentioned, they're really specialized, really niche, and there's just not so many of them out there. So a big part of it is accessibility, because that's what's available. And another thing is it's most common. It's what most people understand and they get it. Most people that own their home bought it with some financing, and they've taken out a note in a mortgage as a borrower, and they're paying on that. So most people are very familiar with this concept, and so that lends itself very well to what we do.
So when we talk about this, it surprises me a little because, I used to own a mortgage company back in the day. And so I'm familiar with the fact that as a mortgage broker, I originate a loan, right? I work with Bank ABC, and then I come out and then I meet their underwriting requirements. I find a borrower, I get the borrower loan through Bank ABC. Then Bank ABC, I'm just, obviously Bank ABC isn't really just making this up. And then Bank ABC packages all these loans that they originate or they create. Then they sell them on the secondary market, typically in bundles, to big investors, as you mentioned, hedge funds, et cetera. So it's interesting to me that you're talking about buying individual notes, because I didn't even know there was a market for that. My whole thought is the secondary market is where they bundle a lot of notes and sell them. So how does an individual investor fit into this when the secondary market typically is done by selling bundles of those? How does an individual, investor infiltrate that to just buy one note at a time?
Well, that's a great question. And what happens when those notes are bundled and packaged? They're put into different bonds and investment vehicles, mortgage-backed securities, and different products like that. And what happens is they're held for some amount of time, but then there's an expiration date for that vehicle where it's going to get sold and broken down after however many number of years. And then those notes all get resold again. Now, as far as individuals being able to buy notes, this is something I talk a lot about in my book on note investing. But notes are bought and sold all the time between investors, between smaller funds, right? Individuals can get involved in networking groups, investment groups to be able to get access to this. Our industry, it's really revolves around personal relationships. And so that's a big part of what we do, what I do. Now, another way for individuals to get involved in note investing is to invest in a note fund, right? And there's many different note funds out there that have a lot of benefits for investors, because some investors, either they don't have time to dedicate to this business, or they don't have the relationships, expertise. And so investing in a note fund, which is professionally managed, allows individual investors to participate in the space while leveraging the expertise, the relationships the experience that the fund managers have to do that, and the access to notes, as you asked. But I'll tell you what, there are real estate investment groups all over the country, right? And in each of those groups, there are investors that do a lot of transactions. They buy homes, they sell homes, with financing, they carry a mortgage for the buyer, and a lot of times they'll sell those notes. And so those are some of the ways, but I definitely cover a lot more of this in my book. But as I said, the main thing to keep in mind is a lot of this is based on personal relationships that you build through your reputation, through the people that you know, and that's how you can get involved. And frankly, Ty, so many smaller investment deals are done through personal relationships. I don't know how many deals, that phone calls I get, whether it's through my accountant, my CPA, or someone I know. They say, "Hey, Fred, you may want to take a look at this. This is interesting." A lot of times things happen that way. And so that's why networking, I feel, is so important. It's a crucial skill, especially if you're involved in investing in any capacity where you're not dealing with your typical retail type investments that are sold, and you're dealing more in specialized areas, or investing in assets, investing in small business, for example. A lot of that happens through personal relationships. And so I always tell people, one of the best skills that you can work on for yourself is the skill of networking and building deeper relationships with others. And that's going to serve you so well, no matter what you do.
And Fred has mentioned a couple times his book, and his book is called The Little Green Book of Note Investing. So if you go to Note Investing, it's one of the top searches on Amazon. But if you look it up, it's called The Little Green Book of Note Investing. So Fred, that being said, this seems expensive, right? Because if I think about a note and on a mortgage, my brain goes to pay $300,000 note, for example, right? And we can choose any number that we want to choose. But in this case, how's it work? Do I basically need to come up with the 300 grand, or let's just say 100,000? Let's just make that a simple number, right?
Yes.
So let's say I want to buy $100,000 note. Then do I have to front the whole 100 grand? Is that what happens? Is I give the person that holds the note the 100,000, and now I, in return, own the note for that property in case the borrower defaults. And if they don't default, they're making monthly payments on that at, let's say, 8, 9, 10% interest. And then I'm collecting the monthly payments on the interest until all's paid. And then I make $500,000 in total on that, or let's say $300,000 in total on that $100,000 note. Is that kind of a brief overview of how it works? Or
yes.
Okay.
Yeah, exactly. So notes are bought in all cash transactions. Yes. So you do need to have the capital to outlay for that. And so it's not something for a beginning investor because of that. You do need to have capital. But there's some different strategies. There are smaller notes that can be bought that have a lower loan balance, for sure. And if you're looking at investing in a note fund, they come in all different configurations. There are some that you can, the minimum is a lower amount. It might be 10 or 25,000. Very common to see 50,000. And there are some that have $100,000 minimum and higher. And that's what happens with a lot of these private investments, private funds. It's set up all different. So they come in all shapes of sizes, and notes can be anywhere. I've seen notes with a $5,000 balance, and I've seen notes with $1 million balance. You have some of those jumbo mortgages, they're out there. And so there's a place for everyone with that.
So I invest and front the $1 million. I'm getting the payments on all of that. And then I just ride it out so they pay all the way through, and then make, what kind of returns do you typically get on something like this?
Well, a couple things. let's talk about this interesting statistic. The average life of a residential mortgage in the United States is between 5 to 7 years. And so even if you buy a note and you're going to ride it out and hold it until maturity, it's not likely to happen. It's actually very rare that it goes all the way. And here's the reason why. It's because with especially with residential notes, life happens, right? Life happens. We're dealing with people and their lives, and people change jobs, they move, they refinance a property, they form a family, they downsize, they upsize, they upgrade, all of these different things. And so you never know when a loan's going to get paid off or refinanced. But on average, it's 5 to 7 years. And you as the lender or as the investor, you don't really have any control over that. And so there's an element of randomness that happens. But the good part of this is that notes are bought at a discount. So you can buy it for less than the amount owed. But if a payoff happens, it gets paid off in full. And so that's where a nice profit can come in. And it's something that it's usually unexpected, but it does happen pretty regularly. And as far as what you can make, rates of return, it's all across the board. It comes down to how much risk are you willing to take. And as a range, I can tell you there are notes that you're going to be making a 4 or 5% rate of return. And then there are others that are 12, 14, 15%, like higher risk notes for sure. But they're all out there. And so it depends on your appetite as an investor.
So if I'm looking to get started, obviously the first step I should take is to go buy the little green book of note investing to give me kind of the guide, because we're only going to skim the surface here of what to do. But give me an idea. What are some of the initial steps I should take if I'm interested in getting started in note investing?
Yeah, great question. Initial steps, definitely start with education, right? Start by learning, reading. There's a lot of great books available out there and podcasts to listen to, podcast interviews. Next, I would say building out your relationships with other investors. Meet some note investors, have some conversations, because it will help you to understand the landscape and get a better feel for what it is you want to invest in. There's so many type of notes, as we discussed earlier. And so finding what's right for you. For someone starting out, I would say focus on lower risk notes. You're going to make less of a return, but it's a good place to get started without having so much complications come in. And another aspect to get started, a great way to get started, is to invest in a note fund where you're definitely part of something bigger, and you're working alongside industry professionals that know what they're doing, and they're going to help provide their guidance and then their expertise to ensure success for everyone. And that's when you know that everyone's interests are in alignment. But those are some of the ways to get started. There's investment conferences and events that are held around the country that are a great way also to get education about investing, and also networking opportunities, because you go to a conference and who else is there? Hundreds of people that are interested in investing in the same business and actively doing it as well. And so you can learn from their experience, their expertise, and that's really powerful. It's about building relationships, as I said earlier.
So one of the biggest questions I think on a lot of people's minds is, how do I get the money for this, right? A lot of people aren't sitting on millions to be able to do this,
Yeah.
or even hundreds of thousands to be able to do this. So what are some strategies that you've used? And you talked about, I think, IRAs a little bit earlier.
Yeah.
What are some strategies you've used for your students that have been able to find the money they need to be able to make this work?
Yeah, great question. So strategies, it's making money in your business, in other assets, in real estate investing. I think owning property is a great way to get involved into an investment with little money down, and over, if it's a long-term hold, that's where you build wealth and you'll generate wealth over the long term. I'm not talking two or 3 years. I'm talking 15, 10, 15, 20 years. That's a longer term scale. And retirement account money, IRAs, you have an old 401k from a prior employer, all of these things. This capital you can use for investing in, if you put it into what's called a self-directed IRA, where you're self-directing, you're able to invest in assets. Now you can go outside of the traditional Wall Street offerings, your stocks, your mutual funds, what you see in employer 401k plans as the offerings. When you get into self-directed IRAs, now you can invest in real estate, you can invest in an apartment deal, you can invest in notes, whether it's individual notes or a note fund. And it's a great way to better leverage that, better utilize that capital that you have. A lot of people don't know about this. This is not a new thing. It's right in the tax code. It's right in the IRS tax code that IRAs and retirement plan accounts, they don't restrict, they don't tell you what you can and can invest in. They only tell you what you can invest in. There's a very small list of exclusions. If you go in the tax code, you'll see that. And so that's why a lot of people don't know that you can own real estate and rental property in your retirement account. Absolutely, you can. Or a note, you can buy a note. You can invest in a small business, in a local pizza shop in your town. You can even do that. These are all the different of options that are available to us in self-directed retirement accounts.
So when you're talking about risk, and you mentioned this a few times throughout, what are some techniques you use to analyze notes to be able to kind of reduce the risk that we may have by, finding the right note to acquire?
Yeah, great question. Risk management is critical. So a lot of it comes down to due diligence. It's before you buy the note, you will want to look at the collateral, of course, right? The real estate itself. What's the real estate market looking like? What's the property valued at? How much equity is there? You look at all of those things. What's the strength of the real estate market in that area? You then go to other factors like looking at the borrower profile, right? And I'm sure you've seen this from your experience working in the mortgage business, right? The borrower profile, their credit, their track record, their history. If you're buying a note that has been originated already, there's going to be a track record and payment history on that. So is there a note with the past 5 years of payments being made on time? Or is it a note where 11 out of 12 payments every year come in, but there's a missed payment here and there that gets caught up? Or is it a note where it's 6 months behind in default? And so those are all different risk profiles that you can look at. Going beyond that, we can look at very important is the reputation of the note seller. Who are you doing business with? Who are you buying that note from? What's their reputation, right? And this frankly goes for any business transaction you do. A lot of people focus on the deal, and that's important. But I think that even more important is the counterparty to the transaction. Do you do your due diligence on them? Are they reputable? Are they honorable? Um, a lot of times I see people that have gotten themselves into trouble. They got into a bad business deal, got involved with someone that was not an upstanding individual. And had they spent 10 minutes doing some Google searches on that individual or their company, they would have learned a lot. And I'll just leave it at that. But those are some of the ways. And it's really important because you're taking on a business partner, or you're doing a business transaction. You want to know who you're dealing with. But what happens over time is those relationships build, and you do repeat transactions because you know who you're working with, you're comfortable, and things go smoothly, as opposed to doing a business deal that's difficult and the other person is confrontational and fighting you. Who wants that? Right? Even if you make money, why do you want to invite that kind of stress and headaches into your life? Isn't it better to do a transaction with a person where things went smoothly, everyone delivered as they promised, and things went well, and at the end of the day, you shake hands, you walk away, and you look forward to doing the next deal? And that is very powerful.
What about managing the note? Once you've acquired the note, is there anything involved with managing the note from that point?
Yeah, there's a lot, actually a lot involved with managing the note. So really key concept around this is working with a loan servicing company, loan servicers. And what a loan servicer does is they manage the note on behalf of the investor. They handle collecting the payments each month. They take phone calls from the borrower to answer questions. They keep track of the amortization schedule and accounting on the note. They prepare all the required IRS tax forms that have to be sent out at the end of the year. They do all of this. And in fact, many states require that a loan be serviced by a licensed loan servicer. So this is now part of some of the regulation in the industry. But whether for me in our business, whether it's required or not, we always use a loan servicing company, and they do this for a very nominal fee. On average, it costs between $15 and $30 a month for loan servicing, and it's a very small nominal fee, but they add so much value. And the best way to think about a loan servicing company is the same way that a property manager is going to manage a rental property for you. The loan servicing company manages the note on behalf of the investor. It's the same thing. It's just like property management, but it's for the note.
Right. Great stuff today. Again, introducing us to something a lot of people aren't even familiar with, but we just scratched the surface of everything there is to learn. Only so much we can go over in 30 minutes. So as we wrap up, where can everybody go to be able to learn more, dive in, and get more education on potentially becoming a note investor?
Yeah. Great. Thank you so much. So a couple things I'll point out. To learn, a great place to start is checking out my book. It's called The Little Green Book of Note Investing, available on Amazon. For anyone that would like to connect with me, I invite you to do that. Reach out. Visit my website, which is fredmoskowitz.com. Or for an easier spelling, you can go to giftfromfred.com and register there. I'll be happy to send out a special report about note investing right there. And if you prefer to use your mobile device, your mobile phone, you can text the word money to 215-461-4433 and then follow the prompts there. But I always love connecting with investors and building relationships. It's so rewarding. And we don't have a lot of time together here today on this interview, but connect with me, reach out, and I look forward to hearing from you in the near future.
I love that. Thanks, Fred. And you said
thank
free
you.
gift from Fred, right?
No, giftfromfred.com.
Giftfromfred.com. Okay. Thanks, Fred. I appreciate it.
Thank you.
Okay, so listen, if you're listening and watching this is a whole different type of investing that you might not have even thought about before, that you can get really, really good returns. There's a lot involved with finding the right borrower, going through an origination process that a mortgage company or a lender goes through. You get the benefit of earning all the return on that note once all that initial work is done. But there's still a lot to learn about this. It can be something that could get you, as Frank said, as Fred said, anywhere from 5% to 10%, 15%, sometimes higher, sometimes lower, depends. But a really, really, really good rate of return, significantly more than most people are earning in the market right now and other places as well. And again, the interesting thing is that you're even able to tap into a lot of different ways to be able to get the money you need to invest, whether it's your own IRAs, 401ks. Other people probably are interested in investing, but don't want to do the work that you could partner up with. There's so many creative ways that we talk about on the show to get the money that you need to actually succeed. But we just scratched the surface of how much there is to learn. So what I want you to do is go to giftfromfred.com. It's just the simplest way to get to his website. And if you go to giftfromfred.com, you're going to go right to his main website, which is fredmoskowitz.com. And it just, so you know, it is spelled Fred, Moskowitz.com. Don't want you to misspell it. That's why Fred came up with giftfromfred.com. It's brilliant because if you go to giftfromfred.com, it just takes you right to his main website. And there you're even able to get a free note investing guide right in the middle of his website. He's got other interviews. He's got plenty of case studies or plenty of other feedback and information about note investing. And you can also get his book as well, which you should. It's called The Little Green Book of Note Investing. You can get it on Amazon. I'm also going to include, I think, yeah, you can, because I just looked on Amazon. And you can also get it right on his website. So there's only one thing you need to remember. You just have to remember giftfromfred.com. Go get the gift, the investment guide. While you're there, grab his book. It's super cheap on Amazon, and it maps out everything you need to know, from how this works, to how to find the notes, to how to evaluate the notes for risk, to how to be able to raise the money and get the money from 401ks, IRAs, other places that you actually need to invest. Everything you need. It's like the Bible of note investing is right here. It's all wrapped up in the Little Green Book of Note Investing. So make sure you go to giftfromfred.com. Everything else you need, access to your free investment guide, the ability to go get his book, other training as well, is all right there on giftfromfred.com. So make sure you check it out. Thank you.